All right, everyone, here we are with ticker symbol Nndm, Nano Dimensions. Before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So, Nano Dimensions yesterday had some massive volume. I mean, after that point where it started to slowly dip in the after hours, it was actually filled with 90,000 in volume, 32,000, and then 200. Just adding all this up, even the 200, even if you just take out the 200 or add it, it doesn't make a big difference compared to the thousands that were actually being sold at the time before officially closing. And to me, that's a lot of volume after hours. That's actually pretty much higher than some of the volume throughout the day, if you ask me. And that's a large amount, 90,000 and 32,000. Well, some people would have looked at it as like profit taking, maybe some people that are uncertain, correcting, and then it's going to come back up tomorrow. I'm not sure if the article came out yesterday or if some people already knew about it, but about the public offering. And the public offering happened to be today. And it happened. And what happens is with these public offerings, it's not always that all of this has been sold. It just naturally makes the stock price go down due to the fact that, for example, let me just give you guys a very simple and brief example. Before the offering, every single owner here, there was only 10 owners. Let's just say there was just 10 owners. I know it's kind of confusing because all that is a lot more than that. But let's just say before the public offering, there was 10 owners of the company. So there's 10 pieces. And you guys get the gist of it. I would draw 10 lines. Out of those 10 lines, all those 10 owners own it. The supply and the demand was strong, and there's probably two or three left over. So these are the outstanding. There's like 2 or 3, so let's just say there's 5 outstanding shares. So in total, there's 15. The supply is there's only 5 more left. And excuse my terrible drawing, but this is a 5, guys, just to let you guys know. And that's a 5 up there as well. But there, and that's a 2. And when I was trying to figure out if I'm going to say 2 or 3, but 5. Let's just say it's 5. There's 5 left. The supply and the demand, right? There's only 5 left, and only 5 more people can obtain it. So there can only be 5 more owners. And every single investor is trying to jump in, and this and that, and it's going up because every day there's a new owner. So if one new owner obtains it, now there's 4 outstanding, now there's 11 over here, right? And then by doing so, the 11 are right here, there's 4 outstanding, and now the stock went up a little bit higher because now there's less outstanding. Well, what happened today is there was 10 owners, there was 5 outstanding, and now there's 10 owners, right? 10 owners. These guys own the stock, and now there's 100 outstanding because that public offering added 100 more, and there was previously 5 outstanding. So what happens is, right, that gotta write it all out because I don't want it to be confusing, but there's 10 owned, 5 outstanding, and now there's 100 added to the outstanding. So now there's not just 5 outstanding, there's 105 outstanding. So the supply is way more than the demand. Now think about this in millions, and that's where you get this effect. And that's why public offerings, you have to be aware of how many are outstanding, how many shares are owned, and all that fun stuff, which you can do research on and find. You have to do your due diligence. But just to kind of break it down to make every single investor be aware that there was 10 owned before, there was 5 outstanding, and now there's 100 added, and now there's 105 outstanding with 10 owned. And that creates this effect of actually making the stock price fall. Now, also when that happens, some people sell, fear, uncertainty, and then you get all the reactions of the stock throughout the day. Now, some people look at it as a discount. Some people look at it as honestly uncertainty, and they don't know if this is going to go any lower or will it bounce back up. Now, the good thing about the outstanding shares in the long term, which is the goal of the company, is that now there's 105 outstanding, which means that before there was only 5 outstanding, which this could only go so much further with those 5 shares left. But now that there's 105 available, this could actually go to a whole new level than expected, which is possibly the goal of doing that public offering and offering more shares and more percentage of ownership of the company, and the company itself is losing a portion of ownership by doing so, but it attracts an availability and a space for more investors to come in and take on more shares. I mean, how many shares do you think were available, or how many shares do you think existed? Every time ARK is buying millions of shares, that right there is going to actually entail and open up the need for a public offering. I mean, you have to look into how many are outstanding and stuff, but just giving you guys an idea of how many were being bought by different large organizations, and ARK is one of them that a lot of people know about and do research on. And if they're buying millions, obviously they're going to need to do a public offering at some point, depending on how many outstanding shares they had left, or they did it purposely, thinking or expecting in the near future for ARK to just load up on millions of more, and other organizations load up on millions of more, and those are all the big fish, while we are the small fish riding these waves wherever it takes us, right? So $6.33, could that be broken through in the near future if the bulls reappear and bring this up? I certainly agree it can, because now there's more shares to buy, which then means it can actually make the shares and the price go up. But in the quick and right away moment, like what just happened, it makes the share price go down due to the fact that there is way more supply than demand. There needs to be like major purchases happening so that that supply starts to wither away and the demand starts to rise, and obviously price will go up. But I hope that analogy of 10 shares available, 10 people own them, there's 5 outstanding, in total there was 15, and every time one person bought out of those 5, it made the stock go up, and then so forth. And now there's not 100 and only added on, because those are the new outstanding shares, but now there's 105 with the other ones, and the 10 previous owners are the ones that take a slight hit because they were owning it before when there was less supply. But now that there's more supply, there's a small chunk of their total amount in their portfolio that takes a little bit of a hit. But now there's 105, which means there's a possibility, to go ahead and expand even further than what the 5 outstanding shares were going to provide. So that's the intended purpose. And sometimes outstanding shares do work. And if 633 was the highest that we reached here and there was less outstanding shares, I believe that with more outstanding shares, if the bulls load up and these big fish come into the market and start buying and making the supply less and the demand higher, this will start to rise and probably break through the $6 mark. But that's exciting news for the bulls. But right now, I know a lot of people are probably feeling a little bit confused on what happened. Why did that happen? Why was there a sell-off? Where is it going now? So we're going to look at this closely at what we want to pay close attention to for tomorrow. So I'm going to look at this very narrow, and then we're going to talk about this a little bit broader. Right now, we're below the 50-day moving average, and in the sideways movement, there was a lot of volatility, and I want to talk about the lowest point reached. The lowest point is 403. The highest point up here is 633. That needs to be broken through by the bulls. So keep in mind 403 and 633 for the next coming days and weeks. Super important numbers. Now, for the bulls to get back into bullish territory, they need to break through the 50-day moving average. And the 50-day moving average is 493. I'd write that down. As long as we're below it, we're in bearish territory. The moment we're above it, we're in bullish territory. But before the bulls get anywhere near the 50-day moving average, they need to break through this resistance, which is 467. 467 needs to be turned into a support. Once that's turned into a support, then the bulls can break away from it. This does not signify that the bulls have gained control, but this is the opportunity to start the catalyst to work closer to their goal and then get back into bullish territory. So it's very important for the bulls to break through this resistance to start to work their way back up. Now, on the other hand, we have what the bears want, and the bears want to break through 431, turn that into a support, and actually leave that behind and break away from it to newer lows. So if the bears accomplish breaking through that and break through that support that they've turned right into a support here, and they want to break through it, now the bears are pulling further away from the 50-day moving average to newer lows. And I want to emphasize to all investors, pay close attention to how the stock is reacting between 403 and 431. How quickly is it moving to newer lows, further away from the 50-day moving average, into bearish territory, or are the bulls trying to reappear to bring this one back up? As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community. And don't forget to hit the like button to let me know you watched this video. Thank you guys so much for watching.